Hey everyone, every year Motilal Oswal published their wealth creation report under the leadership of Mr. Ramdev Agrawal. And recently they published the Motilal Oswal 29th wealth creation report that titled Creating Wealth Through Bruised Blue Chips. This report suggests that blue chip stocks usually command a high valuation due to their leadership in the sector and a long history of wealth creation. However, sometimes even blue chip stocks goes through a rough patch and share price can get hammered. That result in a significant fall in its valuation. But that creates a great opportunity to invest money for a significant wealth creation. But the key question is to understand what factors result in the fall in blue chip stocks, share price, and what factors result in comeback from the lows. And most important, what is the right time to buy those bruised blue chip stocks. So the next 15-20 minutes, I'm going to share the entire learning from this report, which will certainly increase your knowledge and help you identify some very interesting blue chip companies that can be part of your watch list. So I've divided this video in 6 parts. First, what is the definition of bruised blue chip stocks? Second, what does history suggest about the bruised blue chip stocks? Third, what factors result in fall in stock price of blue chip companies? Fourth, what factors result in healing of bruised blue chips? Fifth, when to buy the bruised blue chips, and sixth, we will discuss the list of these bruised blue chip stocks shortlisted by this 29th wealth creation report by Motilal Oswal. Personally, as a long-term investor, I found this report very informative and I hope you will appreciate it as well. Alright, let's get started. So first start with defining what is a blue chip stock. So there is no textbook definition to it. This 29th wealth creation report has defined blue chip stocks that have listing history of minimum 10 years, among top 50 companies in terms of market cap, and third, if not among top 50 companies by market cap, companies need to fulfill 2 criteria to qualify as blue chip. First, they must be within top 250 companies by market cap, and second, they must have 10-year average ROE of at least 20%. Based on these criteria, they shortlisted 68 companies for FY 23-24. But the catch is, majority of blue chip stocks are unlikely to be available at reasonable price due to their excellent track record of wealth creation in the past. Hence, if a blue chip stock is bruised, then it is likely a golden entry point. But the question is, how do you define a bruised blue chip? So Motilal Oswal team has defined bruised blue chip as stocks that have fallen by 50% or more at any point in time during FY 15-24 as compared to the highs of FY 10-14. If the stock meets the criteria, it is defined as bruised blue chip. Now next question is, what is the guarantee that these bruised blue chip would create wealth for the investor? For that, let us look at the history of bruised blue chip stocks. So this 29th wealth creation report listed down 10 bruised blue chip stocks that have fallen significantly during 2010-14 and their valuation became very attractive. And when they made a comeback, they created significant wealth for the investor. Let's have a look at the list. So this is the list of 10 stocks that include Cummins India that made a high of 602 rupee during 2010-14 period and then fell down to lows of 282 during 2015-24 period. That was a fall of 53%. During that period, its PE fell down from highs of 26 to lows of 13. Price to book fell down from 6.1 to 2.1 and from those lows, it has generated 81% CAGR return till March 24. In other terms, it's more than 12 times growth in share price. Likewise, there are names like Bank of Baroda that fell down from highs of 210 to 36 rupee with price to book falling from 2.1 to 0.2. And then it zoomed around 8 times to highs of 250 plus. Mahindra & Mahindra fell down from 527 rupee to 246 rupee with PE falling from 21 to 15 and then generated 67% CAGR return, which is nearly 10 times return. Then it includes names like Glenmark Pharma that fell down 73% and then generated a CAGR return of 54% from the lows. Shriram Finance fell down 51% and then generated a CAGR return of 53%. Likewise, it includes Sun Pharma, NTPC, Jindal Steel, GAIL and Engineers India. Although this list also considered the COVID lows, which was an exceptional event. As a result, stock price went down significantly. Plus, after COVID, we have seen an extraordinary rally in Indian stock market. Hence, some of the mentioned stock in the list are now trading at much higher valuation as compared to their historical median. Having said this, a blue chip stock, if get bruised and available at attractive valuation, can certainly create great buying opportunity. Personally, I also like to wait for such opportunities to buy bruised blue chip stocks, and I remember buying Divis Lab during March 23 at levels around 2800 where it corrected nearly 50% from its peak after a sharp rally post-COVID. In fact, I also discussed it on my YouTube channel when it fell down from peak of 5,400 to levels of around 3,700. It further fell down to 2,700. But from there, it has bounced back to current levels of nearly 6,000. In case you want to understand my own investment strategy, you can explore my weekly video series that include one exclusive video every week. But this series is only for long-term investor. I also track more than 200 quarter results in an Excel that helps in identifying many promising opportunity. For more details, you can explore my website or join button of my YouTube channel. Moving on, the important question here is, what factors result in fall in stock price of these blue chip companies? Let's have a look. Broadly, there are two factors that result in fall in stock price of a company. First factor is stock market related bruising. So there are events in stock market once in a while that result in brutal correction, and that also result in sharp correction in blue chip stocks. For instance, the last brutal correction happened during COVID period in 2020. Before that, demonetization in 2016 resulted in sharp correction. Then there was 2008 housing bubble burst, 2000 dot-com bubble burst, and so on. Such corrections create a lifetime opportunity to load up blue chip stocks at discounted level. However, such events happen very rarely. Then second factor is company related bruising that include both external factors and internal factors. For example, external factors include factors like sectoral slowdown, adverse change in competitive landscape, adverse change in government regulation, or it could be value migration or a global event. This report discussed various examples where blue chip stocks got bruised due to factors we discussed recently. For instance, due to sectoral slowdown, Siemens PAT fell down significantly during 2012 to 14 that resulted in 75% fall in its share price. Due to entry of Jio into telecom sector, Bharti Airtel PAT fell down significantly during 2016 till 20 and that resulted in 51% fall in share price. Due to adverse government regulation, oil marketing companies like Indian Oil witnessed very volatile earning and that resulted in 81% fall from 2016 to 10 high. Due to value migration from public sector bank to private sector, Punjab National Bank share price fell down 79%. Then COVID badly impacted the profitability of hotel companies where Indian hotel share price fell down 62% from 2014 to 18 high. So these are the examples of external factor. Then there are various internal factors that result in fall in share price. It could be due to capital misallocation, which is basically your wrong mergers and acquisition, then weak or outdated management strategy, corporate governance issue, debt pileup or deterioration in financial performance. An example of capital misallocation is Tata Steel acquisition of Chorus in 2008. This acquisition also coincided with global recession. After that, Tata Steel posted losses for 5 years over the next 10 years and its share price fell down 80% from 2004 to 8 highs. A poor corporate governance example is CG Power that was earlier part of Crompton Greaves that got involved in financial scam. As a result, CG Power reported significant losses and it became a penny stock. Later, CG Power got acquired by Murugappa Group and rose from the ashes like a phoenix. Then increase in debt levels has badly impacted many companies like Jindal Steel, Suzlon, CG Power. That was one of the major reasons for sharp fall in earning growth and hence sharp correction in the share price. Okay, now that we've discussed the factors that result in fall in share price for bruised blue chip companies or any company for that matter, let's try to understand what factors result in bruised blue chip to heal and the stock price to rise again. Just like factors that resulted in fall in blue chip stocks, the rectification of those factors result in rise. For instance, after COVID, when we witnessed bull rally in stock market, a lot of bruised blue chip stocks also jumped. Likewise, after every major stock market correction, when the market recovered, the stock prices also recover. As far as company specific factors are concerned, it again include internal and external factor. For example, capital good companies are a brilliant example of upcycle in the last few years due to increased investment in the infrastructure and manufacturing sector. Then this report mentioned example of Suzlon that has seen a fantastic growth after massive wealth destruction. This growth is due to tailwind in the wind energy sector due to favorable government policies. Next example is of real estate sector where government launched RERA in 2017 that improved transparency and accountability in real estate sector and that directly benefited the entire real estate sector. Plus, after a massive slowdown during 2010 to 20 period, there was a high demand for housing and supply was low. It resulted in massive growth of real estate companies including DLF, Godrej, Prestige, Sobha and so on. Next, Airtel is a great example where it fell down due to strong competition. But when the competition landscape improved after consolidation in the telecom industry, Airtel has witnessed brilliant recovery in its profit and eventually its share price. Another brilliant example is corporate restructuring of CG Power after it got acquired by Murugappa Group. Similarly, there was a restructuring in Mahindra & Mahindra that included change in senior leadership, divesting overseas subsidiaries to exiting many unrelated and unprofitable businesses. So after corporate restructuring, CG Power zoomed nearly 100 times and Mahindra & Mahindra zoomed 10 times from the lows. Then Indian Hotel is an example of global event where it got badly impacted due to COVID, and when the situation normalized, its share price zoomed from the lows. Then some other factors that result in rise include your cost control, debt restructuring, improvement in financial performance. Then of course, sometimes there are multiple factors that result in downfall in company's performance and multiple efforts that result in its rise. This 29th Wealth Creation study has discussed multiple such case studies where Mahindra & Mahindra is one of them. So during 2016 till 20 period, there were multiple factors that resulted in fall in its performance and hence its share price. External factors included macroeconomic and regulatory challenges where rural economy faced multiple setbacks including weak monsoon, low crops prices, then our entire country witnessed demonetization that directly impacted Mahindra & Mahindra tractor sales as well as other vehicle sales. Then liquidity was a major concern in NBFC due to IL&FS crisis, hence it was not easy to get loans. Then auto industry was going through transformation from BS4 to BS6 emission and that required significant R&D investment. On top of that, there was intense competition from players like Maruti, Hyundai and newly launched Kia during that time. Then Mahindra & Mahindra faced multiple internal challenges including weak product portfolio, slower adoption of EV segment. Then some of their investment failed to generate the expected returns, especially the acquisition of SsangYong. As a result, its share price fell down badly. But during 2020 till 24, a lot of things went in favor of the company. Mahindra & Mahindra underwent a significant change in its leadership with new CEO and MD, new R&D head. Then they performed certain corporate restructuring by exiting less profit-making subsidiary. They also launched a solid portfolio including Thar, XUV 700, Scorpio N. And then, of course, external factors like Bharat 6 stage transition happened, demand started coming in, and hence Mahindra & Mahindra revenue and earning growth improved significantly, and that got reflected in its share price. Now that we have discussed various factors that result in fall and then rise of blue chip stocks, let us look at the final segment, that is when to buy the Bruised blue chips. So Motilal Oswal 29 Wealth Creation study has highlighted 4 steps to follow before buying the Bruised blue chip stocks. First, create a watch list of all Bruised blue chip stocks. Second, clearly understand the reason for bruising. Third, await healing trigger. Now this is very important. Don't directly jump and buy the stock, but understand what started the correction and what is the reason that can result in healing. Again, you need to refer to all the factors that we discussed that result in healing of blue chip stocks and identify which factor is applicable for which stock. And fourth step is to buy only when the prospects are bright and valuations are attractive. Now this is a very subjective decision. You can't generalize a specific valuation to all the Bruised blue chip. Although this report suggests the best time to buy Bruised blue chip is when the price to book reaches around 2 times. Now let us look at the list of Bruised blue chip stocks that are discussed in its annual study. So this is a list of Bruised blue chip stocks. It includes Adani Total Gas that is down 80% from its peak as of 28th November. Next is Adani Green that is down 64% from the peak. It is followed with Adani Enterprises, then Gujarat Gas, SBI Card, Tata Elxsi, Avenue Supermart, IRCTC, Berger Paint, Asian Paint and IOCL. Now here I could not get one thing. When the report is mentioned, Bruised blue chip are stocks that have fallen 50% or more from their 5 years high, then with that logic there are only 2 companies that fall into that criteria. Maybe their 50% correction criteria is too strict for a blue chip stock. I think that even 30% correction should be good enough if the blue chip stock has high potential. But the catch is, the report mentioned best buying time when the price to book reaches around 2 times. With that logic, you can't buy these Bruised blue chip because there is only one company, IOCL, that has a price to book of below 2, but its historical price to book in 10 years is also 1.2. For rest of the stock, they need to correct 50 to 80% from current levels to reach price to book of around 2 times. So overall, this report is definitely good to learn a lot of things like what factors result in fall in stock prices, also what factors result in rise in stock price. That has identified some interesting blue chip stocks that have fallen from their highs. But the criteria set by this report is more theoretical in my opinion than being practical. As discussed, if you set criteria as 50% correction from peak, there are just 2 blue chip stocks as per the report that meet this criteria. And also buying them at 2 times price to book is again next to impossible unless we again face the 2008 housing bubble type situation. So practically speaking, a 30% correction from peak is good to track the company and wait for the right trigger before buying it. This report also did not include stocks like Bajaj Finance as it did not meet its list with 30% correction. But Bajaj Finance has witnessed a 3 years of price consolidation and hence its valuation has fallen from price to book peak of 13.3 in last 5 years to current price to book of 5.1. So that's 61% correction in valuation from its peak. In my opinion, Bajaj Finance also should get qualified as Bruised blue chip. By the way, before we close this video, this report also discussed about a few technical parameters that combined with fundamental analysis can potentially help in timing the entry in Bruised blue chip. It includes double bottom pattern, reverse head and shoulder pattern, rounding bottom pattern and flat base pattern. Although they did not focus much on technicals as they clearly mentioned technicals are not their forte. So in this video we discussed 29th wealth creation report by Motilal Oswal that got published under the leadership of Mr. Ramdev Agrawal. Every year Mr. Ramdev Agrawal comes up with a very interesting report that provides fantastic insight and really help us in our journey of long-term investing. There are definitely some good blue chip stocks that have corrected from the peak and worth keeping in watch list. Some of them would certainly bounce back and money invested at right levels would help you create a lot of wealth from those bruised blue chip stocks. Now tell me in the comment what is your take on this report and which stock do you think definitely falls into bruised blue chip category. If you find this video useful, do share it within your circle. I'll see you next video. Till then, take care.